Welcome, everyone, to the Master Clock, Is Crypto's Freedom an Illusion? I'm Maggie, and today we're diving into a fascinating and really important question about the world of cryptocurrency. Our central debate question is this: do crypto assets truly operate independently, or are they, perhaps, subtly echoing a singular, unseen code system? It's a big idea, and we're going to break it down for you. Over the next hour, we'll start with an introduction, move into opening remarks from our debaters, then a discussion, followed by rebuttals, and finally, a conclusion. Our goal is to help you understand the different perspectives on this complex topic. Joining us today, we have Eleanor, who will be arguing for the idea of a unified code system, suggesting that crypto's independence might be an illusion. And on the other side, we have Lila, who will present the case for true decentralization and the genuine freedom of crypto assets. This topic matters immensely, especially for young learners and students like yourselves, because understanding the underlying mechanics of digital finance and emerging technologies is crucial for navigating our future world. It impacts everything from digital ownership to global economics. So, without further ado, let's get started. Eleanor, please begin with your opening remarks.
Thank you, Maggie. My argument today is that the perceived freedom in crypto assets is, in fact, an illusion. What we observe isn't a market of competing assets, but rather a single, massive code system at play. I've seen undeniable proof of this. When you look at dozens of altcoins, they don't just align with Bitcoin's movements, they obey them. Percentage shifts are replicated, amplitude scaled, almost like a choir singing from the same sheet of code. Even forgotten meme coins, the digital dead, shadow Bitcoin's lead with abrupt spikes and synchronized drops. It's not just correlation, it's a clear pattern of obedience, suggesting a master clock.
Eleanor, that's a very strong opening, suggesting a deep, almost mechanical synchronization. Lila, what are your initial thoughts on this idea of a unified code system and the illusion of freedom?
Thank you, Maggie. Eleanor raises an interesting point, but I believe the idea of a master clock controlling everything oversimplifies the complex, decentralized nature of crypto. Correlation, while present, doesn't automatically equate to control or a lack of freedom. Bitcoin, as the largest and most liquid cryptocurrency, naturally influences the broader market. It's often seen as a benchmark, and its movements can trigger reactions across other assets due to investor sentiment or even algorithmic trading strategies, not necessarily a hidden code system. Each crypto asset has its own unique code base, development team, and community. This inherent decentralization is what gives them their freedom and allows for diverse innovation, even if they often move in similar directions.
So, Eleanor, you're suggesting a deeper, almost programmatic control, while Layla argues that market dynamics and Bitcoin's influence explain the observed correlations. Eleanor, could you elaborate on what you mean by assigned value and volatility as output?
Absolutely, Maggie. If every asset moves in lockstep, then the market's so-called freedom is a theater of constraints. What millions call price is nothing more than an assigned value, a multiplier preordained by this underlying code. The real output isn't value in the traditional sense. It's volatility. Movement itself becomes the message, and the constant noise acts like a narcotic, distracting from the fact that the myth of supply and demand is just a scripted performance.
That's a powerful image, Eleanor, a scripted performance where volatility is the true output. Lila, how do you respond to the idea that prices are merely assigned values and that the market is a simulation, not a free exchange?
I respectfully disagree with that interpretation, Eleanor. While volatility is certainly a characteristic of crypto markets, especially newer ones, it's not the sole output. The value of a cryptocurrency is derived from many factors: its utility, adoption, technological innovation, and community support. To say prices are assigned ignores the millions of individual decisions, the genuine supply and demand from users, developers, and investors. The market isn't a simulation, it's a dynamic ecosystem driven by human interaction and technological progress, not a single controlling entity.
So, Eleanor sees a preordained system where freedom is an illusion, and Layla emphasizes the genuine, decentralized forces at play. Let's dig a bit deeper into this master clock concept. Eleanor, what evidence, beyond correlation, points to this singular code system?
It's the precision, Maggie. It's not just that they move together, it's the exact replication of percentage shifts, scaled amplitudes. It's like a digital echo, where the original signal is Bitcoin, and everything else is a delayed, distorted, but fundamentally identical reflection. My research suggests that if you strip away price data and just look at directional change across uncorrelated coins, you'd find them identical. This level of synchronization points to a deeper, programmatic control, not just market sentiment.
I'd argue that such precise movements could still be explained by sophisticated arbitrage bots or high-frequency trading algorithms that react instantly to Bitcoin's price changes. These aren't necessarily evidence of a master code, but rather efficient market mechanisms at work. The underlying code of each blockchain is transparent and auditable. If there were a singular, unseen code system dictating all movements, it would be incredibly difficult to hide, especially in a world built on open-source principles.
That's a crucial distinction. Is it a hidden master code, or is it the visible hand of advanced trading strategies? We'll explore that more after the break. Thank you both for these insightful opening remarks. Welcome back to the Master Clock. Before the break, we were discussing whether the synchronized movements in crypto markets are due to a hidden master code, as Eleanor suggests, or simply the visible hand of advanced trading strategies, as Lila posits. Eleanor, could you elaborate on how this master code might operate without being immediately obvious to everyone?
Of course, Maggie. Think of it like a complex operating system running in the background. You don't see the code directly when you use an app, but it dictates every function. My research, like the experiment Plum conducted with Alex, suggests that if you strip away all the noise and just look at directional changes across seemingly uncorrelated coins, you'd find them identical. That level of precision points to something deeper than just market sentiment or arbitrage bots.
Eleanor, I appreciate the analogy, but the core principle of blockchain is transparency. Every line of code for these cryptocurrencies is open source and auditable. If there were a hidden master operating system dictating all price movements, it would be incredibly difficult to conceal, especially with the global community of developers constantly scrutinizing these networks. It just doesn't align with the open nature of crypto.
That's a fair point, Layla. So Eleanor is suggesting a hidden programmatic control, while Layla emphasizes the transparent and auditable nature of blockchain. Layla, if hypothetically Eleanor's theory were true and there was a master code, what would be the biggest implications for the crypto world and its users?
Well, if that were true, it would fundamentally undermine the entire ethos of decentralization and financial freedom that crypto promises. It would mean that individual investors don't truly have agency, and the market isn't driven by supply and demand, but by a pre-programmed script. It would essentially turn crypto into another centralized system, just with a digital facade.
And that's precisely my point, Lila. The players are real, the losses are real, but the freedom is fake. What we perceive as market freedom is a theater of constraints. The illusion is so powerful because the volatility, the constant movement, acts like a narcotic, distracting us from the underlying truth.
Eleanor, that's a very strong statement. Could you clarify what you mean by the freedom is fake for an individual investor? How does this master code impact their ability to make independent financial decisions?
It means that the perceived value, the price of an asset, is merely an assigned value, a multiplier preordained by this code. Your decision to buy or sell, while feeling autonomous, is happening within a system where the ultimate directional movement is already set. You're participating in a simulation where the outcomes, in terms of overall market direction, are largely predetermined.
I have to respectfully disagree, Eleanor. While market trends exist, individual investors absolutely have agency. They choose which assets to invest in, when to buy, when to sell, and how to manage their risk. The market is a complex interplay of millions of these individual decisions, not a single pre-programmed script. If it were, we wouldn't see the diverse range of projects and innovations we do.
So, Eleanor sees a lack of true individual agency within a predetermined system, while Lila emphasizes the power of individual choices and diverse innovation. Lila, can you give us a concrete example of a crypto project that, in your view, clearly demonstrates genuine independent innovation and isn't just echoing Bitcoin's movements?
Certainly. Consider projects in the decentralized finance or DeFi space. Platforms like Uniswap or Aave, for instance, have created entirely new financial primitives, automated market makers, flash loans that operate on their own logic and utility. Their value is tied to their functionality and adoption within their specific ecosystems, not just a reflection of Bitcoin's price. While they might experience broader market sentiment shifts, their core innovation and utility are independent.
I acknowledge the innovation in DeFi, Lila, and the utility these platforms provide. However, even these innovative projects, when you look at their price charts, often exhibit the same synchronized drops and spikes relative to Bitcoin. The underlying utility might be unique, but their market behavior, their price movement, still seems to dance to the same master rhythm. It's the market's response to these innovations that appears to be constrained.
That's a fascinating distinction, Eleanor, that innovation can exist, but its market expression might still be controlled. This brings us to a crucial question. If such a master code exists, what would be its purpose? What would be the why behind creating such a system?
The purpose, Maggie, could be multifaceted. It could be about control, maintaining a certain order within what appears to be chaos. Or, as I suggested earlier, the real output isn't value in the traditional sense, but volatility itself, movement as message, noise as narcotic. Perhaps the system is designed to generate this constant flux, keeping participants engaged and distracted from the underlying mechanics.
That's a very dystopian view, Eleanor. To suggest that the entire crypto market is a grand simulation designed to generate volatility for some unseen purpose seems to contradict the very principles of open source development and community-driven innovation. Such a complex, hidden system would require immense coordination and secrecy, which is incredibly difficult to maintain in a decentralized, transparent environment.
We've certainly delved into some profound ideas today. Eleanor, you've painted a picture of a deeply synchronized, almost preordained market where freedom is an illusion. Lila, you've passionately defended the genuine decentralization and individual agency within crypto. We'll continue this fascinating debate after a short break, exploring more about the nature of value and control in the digital age. All right, we're nearing the end of our debate on the master clock. Eleanor, let's start with you for your closing remarks. What's your final message for our audience?
Thank you, Maggie. My argument is that crypto's perceived freedom is an illusion, driven by a singular, unseen code system where volatility is the true output, distracting us from deeper control. This matters because it challenges us to critically evaluate what true freedom means in digital finance. My question for you all is, if the market is a performance, who is the audience, and what is the true cost of the show?
A truly thought-provoking question, Eleanor. Layla, your turn for closing remarks. How do you see the crypto landscape, and what should our audience take away from our discussion today?
Thanks, Maggie. I firmly believe in genuine decentralization, driven by transparent code, diverse innovation, and individual agency, not a master controller. This perspective is crucial because it empowers individuals to participate, innovate, and build a more open financial future. So, I ask you, how can we as a community continue to foster true decentralization and ensure that innovation truly serves individual freedom?
Thank you both for such a rich and insightful discussion. We've heard Eleanor argue for a master clock, suggesting crypto's freedom is an illusion, while Lila has passionately championed true decentralization, emphasizing market dynamics, transparent code, and individual agency. Both have urged us to think critically about the nature of value and control in the digital age. For our young learners and students, I encourage you to explore these ideas further. Research blockchain technology, delve into market mechanics, and most importantly, keep asking questions. Your critical thinking is vital for navigating this evolving digital world. Thank you, Eleanor and Lila, for this incredibly insightful debate, and thank you all for joining us on the Master Clock.